Biconomy exchange. What is technical analysis? Technical analysis is a trading discipline employed to evaluate investments and identify trading opportunities by analyzing statistical trends gathered from trading activity, such as price movement and volume. Understanding technical analysis. Unlike fundamental analysis, which attempts to evaluate a security's value based on business results such as sales and earnings, technical analysis focuses on the study of price and volume. Technical analysis tools are used to scrutinize the way supply and demand for a security will affect changes in price, volume, and implied volatility. Technical analysis is often used to generate short-term trading signals from various charting tools, but can also help improve the evaluation of a security's strength or weakness relative to the broader market or one of its sectors. This information helps analysts improve their overall valuation estimate. Technical analysis attempts to forecast the price movement of virtually any tradable instrument that is generally subject to forces of supply and demand, including stocks, bonds, futures, and currency pairs. In fact, some view technical analysis as simply the study of supply and demand forces as reflected in the market price movements of a security. In general, technical analysts look at the following broad types of indicators: price trends, chart patterns, volume and momentum, indicators, oscillators, moving averages, support and resistance levels. There are two primary methods used to analyze securities and make investment decisions: fundamental analysis and technical analysis. Fundamental analysis involves analyzing a company's financial statements to determine the fair value of the business, while technical analysis assumes that a security's price already reflects all publicly available information and instead focuses on the statistical analysis of price movements. Technical analysis attempts to understand the market sentiment behind price trends by looking for patterns and trends. Technical analysis differs from fundamental analysis in that the stock's price and volume are the only inputs. Technical analysts use stock charts to identify patterns and trends that suggest what a stock will do in the future. How is technical analysis used? Technical analysis attempts to forecast the price movement of virtually any tradable instrument that is generally subject to forces of supply and demand, including stocks, bonds, futures, and currency pairs. Across the industry, there are hundreds of patterns and signals that have been developed by researchers to support technical analysis trading. Flags. A flag is an area of consolidation that's against the direction of the longer-term trend and happens after a sharp price move. Bull flag. The bull flag happens in an uptrend, follows a sharp move up, and it's typically followed by continuation further to the upside. Bear flag. The bear flag happens in a downtrend, follows a sharp move down, and it's typically followed by continuation further to the downside. Pennant. Pennants are basically a variant of flags where the area of consolidation has converging trend lines, either akin to a triangle. Triangles. Ascending triangle. Essentially, each time the price bounces off the horizontal resistance, the buyers step in at higher prices, creating higher lows. Descending triangle. Typically, if the price breaks through the horizontal support area, it's followed by a quick spike down with high volume. Symmetrical triangle. The symmetrical triangle is neither a bullish nor a bearish pattern, as its interpretation heavily depends on the context, namely, the underlying trend. Wedges. Rising wedge. It suggests that as the price tightens up, the uptrend is getting weaker and weaker, and may finally break through the lower trend line. Falling wedge. It indicates that tension is building up as price drops and the trend lines are tightening. Double top and double bottom. Double top. The pattern is confirmed once the price breaches the low of the pullback between the two tops. Double bottom. The pattern is confirmed once the price reaches a higher high than the top of the bounce between the two lows. Head and shoulders. The pattern is confirmed once the price breaches the neckline support. Inverse head and shoulders. The pattern is confirmed once the price breaches the neckline resistance and continues higher. We wish you a successful trading experience on Biconomy Exchange. Thank you. Download our application.